Well, now let's break down all these latest developments with Saruhan Hatipoglu, the CEO of BERO and CGTN's Global Economics Analyst. Welcome back to the show.
Good evening.
So as we saw there, both sides agreeing to continue trade talks and potentially extend this March deadline. How would you say the talks are going?
Talks are going well, but I don't think that means that the differences are ironed out and both sides are ready for a comprehensive trade agreement. I don't think this is going to happen. What I believe is going to happen, and we've seen some signs of it already, is several memorandum of understanding, very short, 200 words or so, agreements on deciding that the talks would be furthered, so alleviating the tension in the time zone that we have right now. But if you look at Europe, if you look at Japan, the same approach has been taken by President Trump. So comprehensive agreement, no. Progress, yes.
So then in terms of the concessions and the memorandums of understanding, which were the ones that stood out to you?
Well, I think it was important about the numbers, the trade deficit numbers. Both sides agree. China agrees to change that. And the United States is very happy with it. President Trump is very happy with it. It was one of his campaign promises. But I think there have been interesting developments in other areas too. Intellectual property issues still thorny, but they have been talking about forced technology transfers. There's going to be a bill, National People's Congress, coming in March, and that's officially banning forced technology transfers. Not many analysts are touching upon this, but to me it's a very big progress in terms of where the two countries are trying to go to. The biggest challenge, I think, is still the state subsidies to state-owned corporations. There's not much movement there. We are also seeing some nationalistic sentiments in China about this. They're looking at U.S. as trying to infringe on China's independence on this specific issue.
So do you see these sticking points then preventing a trade deal from happening, or is this something that's going to become par for the course as you have these two huge economies who both want to upgrade their economies really heading in the same direction?
Not only upgrading, but also averting a slowdown. We're seeing that in China now. If you look at the numbers, the growth numbers we know from 2018 was one of the slowest growth that we've seen. But service industry is slowing down, consumer spending, car sales. We're seeing all of these things unfold. In the U.S., we have not yet witnessed this, other than stock market volatility that we've seen for the past quarter or so. But there are some signs that we're also seeing, like retail sales. 1 month does not a trend make, but that is a sign that the consumer spending is going to be affected by that. Both leaders know this. They both want to avoid this. But again, I think the first thing that's going to be done is that trade deficit issue. If that kind of an agreement is signed, President Trump is going to be happy, and the Chinese government as well, because that opens doors for further discussions.
Now, something interesting, we see that if China ramps up its purchases of U.S. goods, that means less money for China to buy U.S. Treasury bonds. How do you see that playing out?
Well, that's been going on for some time, actually. For the past 5 months or so, they're reducing their dependence on U.S. Treasuries and looking for gold and other commodities. And that makes sense because there is tension between the two countries. That's not going to go away come March 30th or whenever this is going to be extended to. There are serious problems, and China realizes that its dependence on the U.S. in financial and economic instruments is not to their liking, and they're going to continue to reduce that.
And we did see some sectors with the existing tariffs already take an immediate hit. But in terms of the sorts of decisions they've had to make about jobs and supply chains, the conversations that it's bringing up, has the situation fundamentally changed the trade relationship between the U.S. and China?
It has. Fundamentally, probably not, but it has changed in a good way. But I will tell you this, everybody is happy about this possible extension, maybe 30 days, 60 days, 90 days, whatever it's going to be. But I'll tell you who's not happy. The businesses who are trying to still come up with their supply chains. They don't know what to do. Now, the semiconductor sales, $200 billion is being thrown out. That means that companies will need to bring production from Mexico, from Malaysia, back to the United States so that it would be counted as their exports. There's still a lot of confusion. That problem has not been resolved.
And very quickly, we know that there's been some criticism that markets really haven't factored in the impact of the trade war as much as they should, being a little bit complacent. What do you think?
Oh, it's been baked in. If you look at today's performance, 130, 140 points, and then this very positive news came from the White House, from President Trump's own mouth, and it went up for 130 points. Upside move from a basic deficit number agreement is very limited. Downside, on the other hand, is limitless. So we're going to continue watching. I hope that there's going to be more of a more comprehensive agreement. I'm not too optimistic on it, but at least we're on the right track.
Indeed. Always good to have you. Saruhan Hatipoglu, CEO of BERO and CGTN's Global Economics Analyst.